Hello, everyone, and welcome. Thanks for tuning into this Your Overseas Home webinar on mortgages in Spain. I'm Richard Way, a member of the Your Overseas Home team, and I'm hosting this session. It's great to have you all with us, whether you're watching live or you're watching our recorded version, which is available through the events page on our recently revamped website. So you can revisit this session if you need to at any time, and of course refer it to friends and family, anyone who might find it useful. So really, this session quite a straightforward topic. We'll be getting all the meaty facts about mortgages in Spain. So we'll be talking about market conditions, how to use a broker and why they're so useful, different types of mortgages, sorts of deals available at the moment, and also the actual process of applying for a mortgage and how your broker will help you. But it's not me who's going to be providing all that useful information because we're fortunate to have here today speaking Tron Mikkelsen, who is he founded and runs the Spanish mortgage broker Loan in Spain, based down in the Alicante region. So Tron's just been telling me he's been running this, I think he said 2008. He's been running this now, so lots of experience, well connected in the banking industry in Spain. So he's here to help you and guide you through finding and getting the right mortgage in Spain. We've got 30 minutes for this session. I believe Tron's going to do a presentation, and then we've got time for some questions as well. So if you do have a question at any point, you can use the questions tool on the desktop there on your dashboard, type it in there, and then I can field the question to Tron. That's it. Yeah, so welcome, Tron. Over to you.
Thank you very much, Richard.
Welcome.
And hello, everyone. Well, the first slide here is no one knows Spanish mortgages like we do. I'm Tron Mikkelsen, originally from Norway, but been living and working in Spain for the last little more than 20 years. And one thing we do, it's Spanish mortgages for international clients. That's what we have specialized ourselves in. I come before starting Loan in Spain, I worked in two different Spanish banks. Been working in both in private banking as a branch director, and different from many other brokers. Most of the team in Loan in Spain comes from banking, Spanish banks. So we have good connections, and more importantly, we know where and how to secure the best mortgage for you. And we in the office, we speak Norwegian, of course, English, Dutch, French, Spanish. And since we have been working both professionally before starting Loan in Spain, but also as a dedicated mortgage broker for international clients buying a property in Spain or refinancing, we understand your situation. We know the paperwork you need to the banks will ask for. We know the situation in the different countries, which is very important. And the whole idea is that it will be as quick and smooth as possible. So with us, typically, when you start a process with us, you get your own personal mortgage advisor. So you have one contact person that will be with you from the very start until everything is completed. And that makes the communication quick and fluid. And still we get quite a bit of Christmas cards from previous clients, because sometimes it can be a lengthy process, not because of us nor the client, but it could be, for example, you're buying a new build property or the seller, something. So sometimes it could last longer than normal. and often we get a good connection. So our goal is to make your Spanish mortgage as quick, easy, and smooth as possible. So typically we help you to get a correct mortgage valuation on the property you're buying. That's important. We help you to open the Spanish bank account. Typically, the bank that will give you the mortgage will ask you to open a bank account in their bank, and we will help you and explain all the paperwork and what to do next, time frame. So, and the most important, we have a no mortgage, no fee. That means if you find a better offer elsewhere, or you don't like any of the mortgages we have found for you, God forbid, we didn't manage to get your mortgage, then it's nothing to pay. So we only charge a success fee. And our main goal is happy clients. So please do check our Google reviews. We are very concerned about having happy clients, doing it quick, doing it good, be very transparent from the very start. That's our goal. So you feel completely sure and comfortable, at least on the mortgage side. And the best thing, we have a fixed low, success fee only, and the fee is fixed for all mortgages because our work is the same, regardless if you want to borrow 100,000 euros or 1 million euros. Our work is the same. That's why we charge fixed fee, same for all mortgages. Well, it's just a small, but some operations, I don't think. It's a tiny, very complex operations. If you have like enormous amount of holding companies, your economy is very complex. That just to understand it, it takes like a couple of days of setting up. But that's maybe 1% of the cases. So if you have a normal salary, or if you have a company without 3 or 4 holding companies, then it's a fixed fee. And what we say to all clients, before you put down any deposit on a property, that it's non-refundable, it's a good thing to talk to us first. We do a free pre-study. So we check your income, your expenses, all the small details, and we can tell you in advance, this will be approved. You can even go up in purchase price. Or we can tell you, yeah, you're just on the limit. So it's a good thing to get your numbers right. Talk to us first. It's free of charge. And then we could guide you on the way. And that's really all. I want just to give a quick intro on who we are and what we do. And we also have this video call you can book online. So then it's just to scan the QR code, and then we can talk about your mortgage and purchase. Very good, Richard. That's all I got for the sales pitch.
Okay. No, very good. Thank you very much. Okay, that's a great introduction to what you guys can do. Let's look a little bit more at why people should look at using a broker instead of trying to go to a bank themselves in Spain, especially if they're not in Spain. They don't know Spanish banks. They don't know the Spanish mortgage market, which why would you if you're not Spanish? And this is where you guys are really valuable because obviously you speak English and you're well connected. Just tell us the key benefits to using a Spanish broker like yourself, because I believe also you'll get deals that maybe you wouldn't get if you went direct to a bank as well, because you have special relationships with banks.
Yeah, it's fairly easy, really. When I worked in Spanish banks, typically 60% of the time of setting up a mortgage in a Spanish bank is collecting the information, setting up everything, talking to the client. With us, the banks get everything just as they want it directly into their own system. So it's a huge time savings. And they have one person to talk to, for example, and one mortgage broker. So the communication is very quick. We put everything in, like, so it's really for them just to check, check, check. Yes, correct, correct, correct. This one we want to do, or this one we don't. That means we get better prices, kind of a wholesaler's price, because we do quite a bit of mortgages. Everything is all ready. But maybe the most important is that it's a huge competition between the banks in Spain. And it's not like one bank is the best. It all depends on the client because, well, I don't know, you have the saying of someone likes the mother and other ones like the daughter. And that's the same in banking. They have a different scoring system in the different banks. So maybe this client will be the best in those 3 banks. That client would be in those 2 and maybe that one. And when we put in an operation in our system, we already know which banks to go for. So we don't send it to 9 banks. It's no point, but we send it to 3 or 4. So that we know in advance will be the best, because that's mortgages for international clients. That's the only thing we do all day long. Yeah. So basically, if you do a mortgage broker, you get a better deal than if you go to a bank yourself, and it will be much quicker.
So you get a better deal, and you get to benefit from your experience and your knowledge of the market and the banking deals that are available, the deals that are available.
Exactly. And sometimes the thing is with Spanish banking, even if you go to one bank, if you go to different branches as a private person, you would probably get different conditions. So that's where we come in. The reason why we are here is that we want to give the client a better deal. So you will save quite a bit, because some people think, well, I just take this mortgage now, and then I will remortgage in a year when I know the market better. But remortgaging in Spain, it's fairly expensive and it's very time consuming. So important, get the best mortgage from the very start.
Mm-hmm. Okay. Let's look a little bit at the actual market now and what's available to people. Give us an idea of some of the deals that or the products that you're achieving for clients from the UK or foreign clients at the moment.
Good.
Yeah.
A couple of years ago, came a change in legislation in Spain. So now the currency of your income, it's very important. So it's not all the banks that will have possibilities to give all clients mortgages. It all depends on their income currency, because now you have the right to convert your mortgage into your income currency at any time in the future. That can also limit some of the products they are able to offer you. For example, some banks won't offer fixed rate for clients with an income in sterling. Other ones will. But basically, you have 3 types of mortgages in Spain. You have what they call a tracker mortgage. The interest rate is fixed for the first year. Currently, just now, when we are speaking, in end of October 2025. The best rates we have for the first year, varies between 1.3% to 1.8. And then after the year, then it will be converted to a tracker mortgage. That means that you will use something they call Euribor, that it's interest rate in euros, and then add a fixed markup, and then it will adjust it automatically every 6 months or every 12 months, depending on the bank. So you have this totally tracker mortgage. Then you have, on the other end, fixed mortgage. But then you have to fix the interest for the full mortgage amount and for the full term. And then typically, if you live in the UK and buying a holiday property here, the maximum term would be 25 years, up until you are 75 or 80 in some banks. There we have 25 years, probably the best just now, from 2.5, 2.4, 2.5 to 3%, locked for the entire term. And then you have
locked for 25 years.
Yes, so it's a very good deal.
Wow.
Thinking about that, the inflation target in the EU is 2%. And then you have something in the middle. It's a mixed one. So you fix the rate for maybe 3 years, 5 years, 10 years. And then it gets converted to a tracker mortgage. This is typically, you also, some people would say, no, why don't go for a fixed rate? But then it depends a little bit on your plan. Like if you're planning to pay the mortgage early, you're only going to have the property for a couple of years. So then it comes into kind of early repayment charges. So but that's typically what we talk to the clients in advance and try to find the best arrangement.
And some of the mixed, give us an idea of products for mixed deals. So
yeah, in fact, the mixed deals, they are fairly, just now, they are fairly similar to, if you look at for 3 years or 5 years, it's not a big difference of looking at for 20, 25. It's fairly the same.
So you'll be fixed for what sort of percentage, what rates are you going to be fixed on?
No, more or less like the same, 2.5 maybe, 2.8. Okay. So if you look at for 5 years or 10 or 20, it's not too different.
And the variable rates, you said it's fixed for a year, did you say? And then you go on to the variable.
Yeah. So
what sort of margin? What's the margin on top of the Euribor that you can get at the moment?
Depends. 0.5 to 1.5%. It all depends on a little bit on the client. And then something that is still legal in Spain, it's the cross-selling. So they give you a discount on the interest rate if you have life insurance in the bank, house insurance, the account. Some banks put in alarm. If you put in alarm in the house, contracted in a bank. So that's typically something we talk with a client in advance as well. We think it's always good to reduce the amount of products you need to have in a bank as much as possible. But then some things you need to have anyway, like a bank account. You do need to have house insurance. Obliged by law to have a house insurance if you have a mortgage on a property. So it's some products that it's fairly okay. And if you take your house insurance in a bank or somewhere else, it's normally not a big difference in price.
So generally, if you take more add-on products, it will help you to get a better rate, better terms.
Exactly. And you are kind of a full customer in the bank. So.
Okay, great. That's good. So that's the sort of deals that are available. And when it comes to assessing eligibility of clients, what are the things that Spanish banks look at? What helps foreign clients become good clients and get mortgages easily?
Okay, the most important for any bank, anywhere, typically will be liquidity. So a bank always value steady income, stable over time, that you use not use too much of your net income on paying fixed loans and mortgages. So that's probably the single most important, liquidity. There, and when it comes to calculating the liquidity, there we see some changes. For example, if you have your own company and you can take out dividends, but you haven't done so, then some banks can look at and see, oh, we see here that for the last 3 years you could have taken out much more than what you actually have done. And then it will take it into account. Some banks won't. If you have interest only, like typically buy-to-lets, a mortgage in the UK, some banks convert it to a repayment mortgage, other ones won't. Some banks, if you have many buy-to-let, well, if you are a professional letter, that you have more than 3 or 4, then they will consider you as a professional actor, so professional player in the market, and then they will put away the all the mortgages under letting properties and all the income in one pot and look at the other income. So, but basically, to make it easy, they often use a limit like 35% of your 35 to 40% maximum of your net income should go towards mortgage and loan payments a month on average.
Yeah. Okay. And presumably you'll assist your clients when you're going through their
Absolutely. Yes.
You'll craft everything to maximize their borrowing potential.
That's important to remember. We are on the client side. So, absolutely. But of course, we try to make the banks fully understand their good position. So, and of course, that's basically our job.
Okay, we've got a few questions coming in now, Tron. So let's look at some of these. Yannicki asks, would I be able to get a joint mortgage with my daughter for a purchase in Spain? So yes. I'm assuming it's for a second home. I'm not sure, but so this lady, I'm assuming it's a lady, would like to buy with her daughter in Spain. Is that something you could do?
Yeah, well, that we do quite often. In fact, there it's a little bit important. The bank will base their risk analysis on the person with the main income. So sometimes we see, I want to take on my daughter, for example. She's studying. She doesn't have any income. Me, myself, I'm, let's say, 65. And I'm the one with income. Then, of course, the bank will adjust the term of the mortgage and affordability and all the risk assessment on the one with the main income, and not the daughter. That is, so if the daughter doesn't have an income, for example, studying, but it's fairly young, they won't get 25, 30 years because they will base there on the main income holder.
Yeah. Okay, so it's perfectly possible. And I imagine you get many couples buying who, one is earning more than the other one.
Oh yes, absolutely.
And it's quite a common scenario.
Yes.
Another question again from Yannicki. Good question. What is the minimum mortgage? What's the minimum amount that you can get for a non-resident, for a foreign buyer, for a resale?
That's different from bank to bank as well, but less than 50 or 60,000 it's hard to get approved.
Okay.
And then maybe some people think, oh, why is that? But it's the cost structure of setting up a mortgage. In fact, the Spanish banks, they pay taxes. When they give a mortgage to a client, they have to pay tax, and they have to pay notary and property register and the people dealing with all the paperwork. So if it's less than 50, 60,000, they don't really earn anything on a mortgage after
Not
maybe
worth
4 or 5 years. So
Mm.
that's why it's not especially interesting for a bank to give, and then he just say
Yeah.
sorry. So above 100,000 is much easier.
Okay, so there's your kind of bottom limit there, 50, 60,000 euros. Yeah. And we said we haven't mentioned loan to value. What's the sort of loan to value with a minimum of 50 to 60,000?
Yeah, typically the maximum in most banks are 70%.
Okay.
We have some banks that are able to go up 75 maybe. You have one product called Digital Nomad. That is something not too well. We had it started in COVID. We had some having a home office in London, awfully expensive, not able to get out, and then they bought a place in Spain and worked from Spain instead. And then some banks started this digital nomad where they could go up to 80%, but it's not too common. So keep it on 70. It will make it better, much better conditions, and easier to get approved in more banks.
Yeah. And also, I guess we should point out that when you buy in Spain, you need to budget 10-12% in buying costs, taxes and fees on top of the purchase price. So your mortgage, your loan to value will be against the purchase price, not against the total.
No,
so
exactly.
You actually need 40% in deposit to get a 7% mortgage.
Or 42.
Yeah.
There also you have, in fact, each region in Spain, they have their own tax regime. So Madrid is one of the cheaper ones. And then Costa Blanca and Costa Brava is probably on the higher end. So, calculate at least 12%.
And your team would help the clients with these figures anyway and remind them.
Oh yeah. Typically, the first thing we ask is, where are you planning to buy? And then we give them a breakdown on all the costs, like the taxes and the notary, property register. And sometimes we get clients saying, I've got, I want to put in £100,000 and I'm planning on buying in Costa del Sol. How much can I buy for with a maximum mortgage? And then we calculate for them so they can start looking.
Yeah. Great. Okay. Question here about it was the mixed rate mortgage. Someone's asked, can you explain the third type that you mentioned, which you called the mixed rates, didn't you? The mixed rate product.
Yes.
Can you just recap what that was? Just remind the person what.
Typically, it's a little bit similar to UK mortgage in a way. It's in one respect, meaning the fixed rate period is typically 2, 3, or 5 years. Someone maybe take it 10 years. So then the interest rate is fixed for that term. So, for example, 3 years at 2.8%. It will never change in those 3 years. But after 3 years, it's automatically converted to a tracker mortgage. And then it will be adjusting